The real-time real estate segment today being brought to you by rsrmoney.com. rsrmoney.com, the 5-year rule for home price perspective. Headlines are saying home prices are starting to dip in some markets. And if you're beginning to second guess your plans based on what you're hearing in the media, here's what you need to know. It's true that a few metros are seeing slight price drops, easy for me to say, but don't let that overshadow this simple truth. Home values almost always go up over time. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490, FM 98.1 video feed, you are seeing a chart of home values almost always going up in the long run. While everyone remembers what happened around the housing crash of 2008, that was the exception, not the rule. It hadn't happened before, hasn't happened since. There were many market dynamics that were drastically different back then, too. From relaxed lending standards to a lack of homeowner equity and even a large oversupply of homes, it was very different from where the national housing market is today. So every headline about prices slowing down, normalizing, or even dipping doesn't need to trigger fear that another big crash is coming. Here's something that explains why short-term dips usually aren't a long-term deal breaker. What's the 5-year rule? In real estate, you might hear talk about the 5-year rule. The idea is that if you plan to own your home for at least 5 years, short-term dips in prices usually don't hurt you much. That's because home values almost always go up in the long run. Even if prices drop a bit for a year or two, they tend to bounce back and then some over time. Take it from Lance Lambert, co-founder of Resi Club, quote, "There's the 5-year rule of thumb in real estate, which suggests that most buyers can buffer themselves from a mild short-term declines if they plan to own a property for at least that amount of time," unquote. What's happening in today's market? Here's something else to put your mind at ease. Right now, most housing markets are still seeing home prices rise, just not as fast as they were a few years ago. But in the major metros where prices are starting to cool off a little, the red bar on the chart in the graph that we shared, the average drop is only about 2.9% since April of 2024. That's not a major decline like we saw back in 2008. And when you look at the graph again that we're showing on the screen, it's clear that prices in most of those markets are up significantly compared to where they were 5 years ago. So those homeowners are still ahead if they've been in their house for a few years or more. Big picture. Over the past 5 years, home prices have risen a staggering 55%. That's according to the Federal Housing Finance Agency. So a small short-term dip isn't a significant loss, even if your city is one where they're down 2% or so. You're still up far more than that. And if you break those 5-year gains down even further using data from FHFA, you'll see home values are up in every single state over the last 5 years. And again, there's a map on the screen if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 and FM 98.1 video feed. That's why it's important not to stress too much about what's happening this month or even this year. If you're in it for the long haul, and most homeowners are, your home is likely to grow in value. Bottom line, yes, prices can shift in the short term, but history shows that home values almost always go up, especially if you live there for at least 5 years. So whether you're thinking of buying or selling, remember the 5-year rule and take comfort in the long view. When you think about where you want to live in 5 years, how does owning a home fit into that picture? Give me a call at 800-306-1990, 800-306-1990. And I will tell you my mother's idea on buying houses: buy and never sell. Right? If you buy a house, wait 5 years, the value's up. Like I said, it did historic 55% there. Don't guarantee that's going to happen in the future. Take the money out and buy another one. Keep your payments on those properties low so that you've got a positive cash flow. Keep reserves in the bank. Have a home equity line of credit on every property in case there's an unexpected non-payment or you have to evict somebody. You don't want to lose the house. And a 20-year plan, you're retired. That's the real-time real estate segment brought to you by rsrmoney.com. No guarantees there. I want to make sure we get that in there. No guarantees. rsrmoney.com. The real-time real estate segment brought to you by rsrmoney.com. RTR.com.